Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. We are still middle of earnings, just big name after big name every day. We're seeing some really substantial moves, whether it's after the close, before the open, right? And this time of the year, so like each quarter, when we're in the earnings season, it really kind of brings back the conversation of boxing options, right? I mean, boxing always something that I have in my toolbook, but I feel like it becomes more prevalent around earnings season because you get so many like overnight gaps, right? Or so many huge moves after hours or pre-market, right? And uh, I guess like what I really wanted to stress in this video is like don't sleep on that strategy, right? Like boxing options. So for those of you not familiar, just very quickly, it's like if you're long a call, right? You're long one call, say on Facebook, which I'm going to talk about as an example. Say you're long one call at at 200 strike, right? So 200 strike call, and Facebook gaps up, say to like 210. Boxing means to sell 100 shares of the stock against that one call, right? 200 strike call. So effectively, you are like netting, you are effectively capping the strategy, right? So you're effectively you're effectively just sold the stock at 210, so your position just turned into the spread, right? So you basically are locking in like the move on Facebook above your strike of 200, right? So same idea works on the downside. If you're holding puts, then you would be buying like the stock, right? Now, when I'm boxing, it is really important to remember risk to reward. Okay, and when you have earnings season, you have like a lot of like really expensive contracts. You have a lot of contracts that are out of the money, priced pretty high. So the temptation is like as soon as it gets there, like you want to box, right? But at the end of the day, you still want to remember that risk reward. Me personally, like when I'm trading earnings, like I want at minimum 2 to 1 risk to reward, right? So if you're buying like a call for $1, I at least want to be able to make two, right? So when it comes to boxing, especially after hours, if you're getting these big gaps, it's something you want to keep in the back of your mind. Risk to reward, right? Like so, stock rallies. Like I don't think, if it's only like $1.50, right? Like then the risk reward is still not really that interesting to like box, right? Because if you risk $1 to only make 50 cents, like that just doesn't match like the risk reward profile I like during earnings season. Okay, but like these are the things that you really want to start looking at because like Facebook is a good example. It was pricing in about 12 and a half points. I didn't have a great read on it, which is why I didn't play it. But it was pricing in 12 and a half points. And after hours, right? So say like the stock closed around like 194, pricing in 12 and a half points. It's like 194.50, pricing in 12 and a half points. That'd be about 207, right? So give or take. So a move to like 207 would basically be the priced in move. After hours, Facebook was trading up at like 214, 215, and it did a lot of volume there too. It wasn't just like a quick pop. It would ran up to 214 and it sat there for a long time, right? So that was significantly above the priced in move. I mean, it was basically 7 to 8 points above the priced in move. And by the time it opened today, it was already below 200, right, or 210, and in the afternoon action, it's below 203. So basically, it went from like a pretty significant winner after hours yesterday, now to today afternoon, it would actually technically be a loser, right? Because now it's only moving about 9 points versus the options are priced in about 12 and a half, right? So especially right now, especially when we're seeing these big gaps, like I always like to stress that gaps, like those significant overnight gaps, like these are the ones that I'm more anxious to kind of lock in because these are the ones where you see like these reversals shape up a lot, right? Well, because the volume overnight tends to be a lot lower, so you'll see like big moves on lighter volume, but then once the volume kicks in, you do oftentimes see reversals, right? So especially during earnings season, like I am always kind of keeping an eye out for an opportunity to box. If you have multiple contracts, maybe like that only would mean like doing like a quarter, a third, a half, right? But if you only have one contract, then you really want to keep that risk reward in the back of your mind, right? So if you're risking one, me personally, like I at least want to be able to make two or more, right? So like I wouldn't want to be boxing right around like my break even point, because from a risk reward perspective, it doesn't really make sense. All right. But again, I like talking about boxing. Like I like to bring it up every couple months, because especially as we're into earnings, like it's just like a really useful strategy to help like manage some of like these overnight moves. Because for options, obviously, you can't trade options until 9:30, and you can't trade them after 4 o'clock. So when you get these big swings, like it does help to be able to like trade equity, so you can either like lock in the moves or maybe like reduce risk after hours. All right. So if you like these videos and you're looking for more information on option trades for earnings, or option trades for like swing ideas, please follow up with the link in the description of the video for more information on options to play. Stay safe, stay healthy, have a wonderful night, and I will talk to you guys all tomorrow.